Good evening, traders. This is Daud from ElliottWave-forecast.com. Welcome to our new video blog. Today we're going to take a look at the Dow Jones US Basic Materials Index. Okay, in case you guys are not aware of what it is basically one of the sub-indices inside the Dow Jones, that you know as Dow Jones Industrial Average. All right, so it's an average of all these sub-indices. Okay, and according to Google, the basic materials sector is a category of stocks that accounts for companies involved with the discovery, development, and processing of raw materials. All right, then it goes on to say that the basic materials sector includes the mining and refining of metals, chemical producers, and forestry products. So recently we have seen the prices of oil, copper, and other raw materials going up. So we thought it would be a good idea and a good time to take a look at this basic materials index to see what the Elliott Wave Analysis, the distribution, and the cycle studies are suggesting where this index should be headed next. All right. So if you take a look at the price structure over here, this is the zero line as you can see on the chart. All right. Now, obviously, we have data in e-signal going back only to 2001. But assuming that this first leg up started from 0, it went up to about 175. We had a pullback there. All right, and then it started rallying again. It reached the equality target around 289. It pulled back, and then this decline over here from the 2008 to 2009 peak looks like a 5-wave move, so we believe it did some sort of a flat in the middle that we have labeled as an ABC, which is a 335 structure to complete wave X. It was approximately 61.8% pullback of the move up from the zero line. All right, then the index started rallying again. It looks like it did 5 waves over here, a 3-wave pullback, another 5 waves here. Okay, so and then this area that you're seeing over here, this is the 0.618, 0.764 extension area of the blue W related to blue X. Okay, that's where it stopped. It made another pullback here. It went on to make a new high. But it didn't then get the follow through. You can see that the pullback broke this trend line, and then the decline from the peak here in 2014 was in 5 swings. 1, 2, 3, 4, and 5, and we had the divergence as well at the lows over here. So this gives it the look of a flat, and you can also see that this channel here was broken, giving the impression that we most likely corrected the cycle from 2009 in this dip, and this most likely took the form of a flat correction, which is a 335 structure. All right, and then if we do the fib retracements here from the blue X to the red W, we pretty much stopped just shy of the 50 back retracement level. Okay, and now of course if you only take a look at the move up from this low, the actual low that we had, then you can say that you already reached the equal legs. All right, the 100% extension from this level here, which is possible, but keep in mind that you have 5 swings from this low in 2009. Okay, you have 1, 2, 3, 4, and 5, and we believe 5 swings is an incomplete sequence. Okay, so that's the reason why it has the look of a flat from this peak to this low. And because of the 5 swings here, we believe it is likely to continue higher, all right, and reach an equality target around 412, 483. Now, there are a couple of different ways it can get there. As you can see on the chart here, it says invalidation level 1. So ideally, any dips should now stay above this trend line and hold above this level for an extension high toward this blue box. In the unlikely event that the move that we are seeing here is actually a flat from this September 2015 low, all right, then the index could still go and see areas around 212, 187, which is where it should still find buyers against this invalidation level 2. All right, and now how will we know if it's gonna respect invalidation level 1 or 2? Okay, of course, nobody has a crystal ball, but we do have a distribution system that we follow. It is quite accurate. It's not 100% accurate, but it has a very good accuracy. So what will happen is that when this cycle ends, the market is going to make a pullback, correct this cycle, all right, and go towards 5061.8 Fibonacci retracement area in 3, 7, or 11 swings, right? So when the pullback happens, our distribution system is going to let us know if this pivot here would continue to hold or not. If this pivot gives up, that would mean that the index did that the red W goes here, and this was your first leg of the correction. This was a flat as a connector. All right. In other words, it will have a W here and X here, and then you will look for, a test of, let's say, 12,186 area where buyers should appear again as far as this level and this pivot here stays intact. Okay. And now that's what we're looking at here in the basic materials index. It does have the look of a flat. So ideally, we believe this low is going to hold. But again, if this the pivot at this low gives up in the next pullback in our distribution system, then it did 3 swings up till here. This will become flat connector, and then it will go here and then rally to that blue box, which is where we like to see it going eventually, because we still see 5 swings from here, and we believe this is an incomplete sequence, and it should make a move towards that area as far as this level here in the first degree, and this one in the second degree, it remains intact. Now, if let's take a look at the structure of the move up from this low here, from this January 2016 low. Now this is the January 2016 low, again the basic materials index in the 8-hour chart, 480 minutes, and we can see that now many waivers would say that this is a 5-wave move here. Okay, 1, 2, 3, 4, 5, but we disagree with that. This is not a 5-wave move, at least as of right now. And the reason for that is that you need to have RSI divergence in a 5-wave move, and you do not have any divergence over here. And then even if you downgrade the chart and go down to the 60 minutes, you still will see that the RSI peak over here is higher than the RSI peak over here, which negates the idea of this being an impulse. And then if you zoom in a little bit, you're going to see that the first leg up here from the lows is a clear 3-wave move. Which is why we don't think it's an impulse, to be honest. It could be a WXYZ structure, all right, in which case, which is a triple 311 swing structure. This is your W here, X, Y, second X, and this could be your Z in progress, which will give you a target around 324, 332. Now, of course, it can truncate here, or you can still reach that area. There's not too much clarity here in the shorter cycles. It can still make another high, or it may not. It needs to break this level here to suggest that this cycle is over. Until then, it still can see that area and then pull back to correct the cycle from the January lows, right? Now, we can take a look at another index in the Dow Jones, all right, which is basically the consumer goods index. This is the August 2015 low. This is the January low here, and this is January low in the basic materials index. Now, in the consumer goods index, we can see that the consumer goods has reached the equality target from this August 2015 low. It did 3 swings here in the first leg. Okay, 1, 2, and 3, and bear in mind it has already made new highs as well above this 2015 peak, which is this peak over here in the basic materials index. Appears to be lagging, and like I said, there's 5 swings here, so this is another reason why why we like the idea of continuation higher, all right, as I explained earlier, against this low in the first degree and this one in the second degree. Now, taking a look at the consumer goods index, we can see 3 swings here. A 3-swing pullback was followed, and then we have another three swings higher to the equality target. There's 7 swings up till here so far. It hasn't dropped that much, so still can make another high. So if you take a look on the left of the chart, you're going to see here I have drawn a WXY and an ABC structure for you guys to understand. Okay, this is the WXY structure, 1, 2, 3, a 3-wave pullback, 5, 6, 7. Okay, this is what you have so far up till this peak. A W/A, X/B, and then a Y either completed here, but if it does make another high from here, which it can, so far it hasn't confirmed that this cycle is over in our system, and the pullback is quite shallow, only 3 waves to equal legs from the peak here, which means if it does make another high, it's going to become an ABC. So then you will only take this here, A, B, and then it will become a C here, like it says, or C, because it still can make another high, and then it becomes a 3, 3, and then 1, 2, 3, 4, 5 swings from this low and becomes an ABC structure. So if we do get another high in the consumer goods, all right, then it is quite likely we get another high here in the basic materials index as well to about 324, 332 area, and then to finish the cycle from January 2016 low, and then we start the three-way pullback, all right, at minimum. And if the consumer goods index sells off hard, doesn't make a new high, then it is quite likely this one also can truncate and pull back without reaching that box. And in either case, the area that we are in right now with the consumer goods at equality target, okay, so it's due a pullback. Of course, it's not at the time to buy. We don't like the selling because you see 5 swings here from the 2009 low. We believe the sequence is bullish, okay, and which is why, of course, we would only be looking for buying opportunities, all right, against this low in the first degree as far as the trend line is holding, and this one in the second degree if the trend line or this pivot breaks over here, okay. Eventually, we do see it going to about 412, 483, and if this low keeps on holding, then ideally we can see after a pullback, of course, in this quarter, we can see an area around 463, 517 as well in the basic materials index, and there it should end the cycle at least from the 2009 lows, and can even end the entire cycle from the 2001 lows as well, which means from the all-time lows, all right, but at least it should end the cycle from here after reaching that blue box. So this was our take on the basic materials index. I hope you enjoyed this analysis, and if you would like to try our services, you can take the free 14-day trial. You got nothing to lose. If you don't like the service, you can always cancel. We cover 50 markets, and we provide frequent updates throughout the day. We have a 24-hour chat room where traders can ask questions to moderators about the instruments that we cover. We have live analysis sessions, which are a great learning tool, and of course, we do a daily technical video, weekend seminar, live trading room, so on and so forth. So thank you so much for watching the video. Take care. Have a nice evening, and all the best.